right, welcome back from our final break. We will be starting our last session now, and that's how to respond to notices with Lindsay Meadows and Katie Zuka. So Lindsay, are you available to join us? Hi, Lindsay. Oh, Lindsay, we can't hear you quite yet.
Can you hear me now?
We can. Right, so I will turn it over to you to help educate everybody on how to respond to those notices that we send out to people that can be kind of confusing and daunting. So thank you so much for joining us.
Thanks, everyone. Good morning, everybody. My name is Lindsay Meadows, and I'm a tax examiner specialist here at the Ohio Department of Taxation. I've been here for 14 years, and currently I am in the Sales and Use Tax Division. We also have Katie Zuka here with me today, and she is representing our Bankruptcy Division Counsel, and she will be presenting at the latter portion of our show today. So we are going to be going into details about the billing notice and assessment process for the business taxes here. And let me get the first slide up for you. Just a little disclaimer here stating that things may change in the future, and just to stay tuned for those changes, but everything that we are presenting for you today is current. So today we would like you to walk away with an understanding of why the department issues billing notices for the business taxes and how you should respond to them in any of the billing phases. We're also going to cover what happens to accounts when a liability has progressed from a billing notice through certification and how to resolve those matters. Business taxpayers have very specific filing requirements for each tax account that they hold with the state. So each return needs to be filed electronically, and that's for any filing period that the account is actively doing business. When the filing requirement or corresponding payments have not been made, a notice is going to be generated to go out to the taxpayer, initiating a billing process, and that's going to be sent through the mail. Once the billing notice is sent, the timeline will progress until a sufficient response is received. So you'll find the due date and all of the response options on the letter. So if a response has not been received by the actual due date on the notice, the obligation will then be eligible for an assessment. At this time, the assessment letter will be generated, and then interest and penalties will be applied to any outstanding amount due. Again, filing and payment options are found on the assessment notice, just as on the original bill provided. You do have a 60-day window at this time to respond to the assessment notice before it's eligible to become certified at the Attorney General's office. So let's talk about understanding the notices. Whether the required response involves taking action to file an outstanding return or making return payment for the outstanding amount due, all of the response options are going to be available on your notice. The department has updated our website to make the response resources as convenient as possible for our taxpayers by providing several options, and that's going to meet the taxpayers where they are at whatever technology they have available to them. The self-help e-library can be found at tax.ohio.gov, and there is going to be a section that gives an example of each notice that we at the department issue. So as you see here, our self-help e-library can be found at the bottom of any page at our website in the quick access section. And you'll also see a quick link for the online notice response service, which is one of the recommended electronic response options on your notices. If our taxpayers have a need for electronic resources, our Welcome Center in Columbus may have the ability to assist. There's a computer available for taxpayers to self-serve, as well as representatives available to receive documents or provide information in person. Our Welcome Center is open Monday through Friday, 8 to 5. For concerns of taxpayers that don't have time to address their return tax matters in between the hours of 8 to 5 Monday through Friday, tax.ohio.gov actually has a contact us link that they can use anytime. The department will respond when we have workers in-house, and they typically respond within 48 hours, very timely. So before we go into further detail about the final actions that could be taken on a past due account, we need to circle back to the beginning and teach you a little bit about the different types of bills that you may see. So to begin, any notice you receive has an explanation and provides links to the response resources in our online self-help e-library. There are 6 specific sections designed to provide information for the variety of business taxes the Ohio Department of Taxation administers, as well as some personal tax information. So section 1 is understanding your individual and income tax billing and assessment notices. Then some additional individual income tax help is available in section 2. Section 3 is what we're focusing on today. That's understanding your business tax billing and assessment notices. And then an additional section you might find helpful is regarding the business gateway. That's section 4. Section 5 is for vehicle and aircraft taxes. And section 6 is an additional section that you can click on, and it will provide you more information about the business tax billing and assessments. And that is through information provided in archived OVTA presentations. So something like you see today is still available online with the information that's still pertinent. So while this presentation does include information pertinent to personal income tax, I'd like to clarify that the focus of today's presentation is going to remain on the business billing and assessment process. So that area of our website, it focuses on educating the taxpayers to prevent any issues in maintaining the responsibility of holding a tax account here at the state. In some cases, taxpayers don't recall or remember or have the file that instructs them on how to do everything to maintain their filing requirement. And this is likely how one of the first notices I'd like to review is one of the most frequently issued. So I implore you all to take a look at tax.ohio.gov, as many of our callers seeking help are able to be directed to our website for the information found here as a resolution to their issue. While our representatives are ready and available to provide call center assistance, we can all appreciate the fact that there is a self-serve option available if you need some help. So one of the more common notices sent to taxpayers, like I said, is the delinquency notice. A delinquency notice is sent to any account that has an outstanding, unfulfilled filing requirement for a tax period. This notice is slightly different than other bills that we send out because it's just a notification that action needs taken on the account. There's no amount due printed on the delinquency notices. What we need is a response of a return being filed or proof of filing. So if you have a confirmation number from the gateway, something like that, you would send that to us. So a common issue is that the taxpayer may feel as though they had completed the filing process using the gateway, and when they sign back in, they find out that that return is stuck in the checkout file and pay section. It hasn't actually been remitted to us yet. So in this regard, you just go in and remit that return. Oftentimes, when this happens, taxpayers will submit a payment-only confirmation page, not realizing that all they did was actually make a payment for the amount that they would have had due if they would have filed that return, but the return is still not here. If the account was not active for a reporting period in question and needs to be closed, a business account update form may be sent in to close or adjust the active dates on the account. Again, you have the option to file a return online using the gateway, or we also have our telefile system available for county vendors licenses and annual CAT tax filers. So as mentioned in the previous slide, this is our business account update form. It's available at tax.ohio.gov using the forms icon at the top of every page. All you do is type in the name of the form that you're looking for. So in this case, business account update form, or you can just type in BAUF, and this will bring up the PDF fill-in. You can either complete electronically and upload it to our online notice response system, or you can also complete it, print it, send it through the mail or fax. The cancellation of an account or an adjustment to the active dates of a business can be submitted using this form. Both are potential response options for this delinquency notice and other notices sent for business taxes. Other requests that can be submitted using this form are to update a legal or trade name, update any of the primary, mailing, or location addresses of the business, and as mentioned before, the cancellation of sales and use tax accounts. A county vendor's license can also be transferred within the same county using this form. And employer withholding accounts, pass-through entity, commercial activity tax, petroleum activity tax, next-gen E911, and financial institution tax can also request account closures through this form. Now, some requests do require supporting documentation, so please see the instructions on the form if this is a specific requirement to your situation. So remember that filing a return is required for an active account, even if there were no taxable sales or revenue for that filing period. So a zero tax return is still required to be filed. If it's determined that no business was done and should no longer have an active account, you should respond with a request to close the account as of the last day of business, even if this occurred further in the past than what the currently delinquent filing period is. So let's say there's a couple periods, close it as of that last date of business. In some cases, a new business might anticipate a start date that is a little earlier than what reality had in store for them. So there are a couple periods maybe where there was no business done. If the vendor's license is active, it's very important to file a zero tax return for these periods in question so that we know that you didn't collect any tax. In some cases, it would benefit the taxpayer to send in a BAUF, the business account update form, to update the start date to an actual time period when they started collecting the tax. And this would potentially eliminate several outstanding delinquency notices. CAT account holders are going to be advised to cancel the account if taxable gross receipts fall under the new threshold, which is pursuant to House Bill 33, and that was effective January 1st of this year, 2024. So you can see the example of the delinquency notice displayed here. There's no tax amounts due listed on this contact, and you have 20 days to respond to this notice by either filing that return and remitting the payment, or if applicable, close the account. As you see here, option 1 provides information to file the outstanding tax return. The options listed here are the business gateway and telefile. Option 2 instructs you what to do if the return has already been filed. They want you to provide a copy of the return or the confirmation number. Please note, a common issue is that a payment only is the transaction that was made for the tax amount due, but no return was actually submitted. So in this case, you would return to using option 1 for your response option. Now, option 3, it provides you the opportunity to close the account as of a specific date. This does not require you to send in a business account update form. You can just simply fill out the account closure date on this notice and send that in as your response. If the response is not responded to, or if the notice, is not responded to by the due date, it is eligible to progress to the next assessment phase. Some taxpayers may need assistance in filing, and the Department of Taxation has customer service representatives available Monday through Friday, 8 to 5, to provide help with gateway or any other questions you may have. For our business tax, our phone number is 1-888-405-4039. Our personal tax is 1-800-282-1780. There's also a way to resolve potential issues that you may experience using the gateway. And while you are signed into the business gateway, you can create something called a case, and that alerts a representative here at the department that there's an issue with your gateway, and they will be able to review your claim and respond with either a resolution or some additional information that's going to help you. So as you see the example of the assessment notice, it now has an estimated tax amount due. Now, this is for delinquency notices where it's an estimated tax amount due. We'd like to reiterate that it is only an estimate until you file that return. Simply paying the amount on the assessment is not going to satisfy that requirement to file the tax return for that period. Once the return is filed, a corrected assessment is going to be issued, and that's going to have the updated tax amount and any interest or penalty that would be calculated for that. A response is still required, and once it is received, it will either cancel, satisfy, or adjust the assessment. And in any of these scenarios, you're going to receive a notice with the current status of this obligation. If an assessment is updated with information from your filing, a corrected assessment will be issued to confirm the current amounts on file. If the assessment reaches the certified phase of collection, no notices are going to be sent from the Department of Taxation. Okay. The next notice is a simple non-remittance billing notice. This confirms that there is an outstanding balance on an account that does have a return already filed. The taxpayer just has not remitted the amount due. It hasn't been paid. The most common response to the bill are to remit the payment or to respond to the notice with proof of payment. If you feel like you already paid it, it must just not have been applied correctly. So if you have a confirmation, you can send that in. We can locate the payment. So this is an image of that bill that's sent to the taxpayer, and you can see here that the tax amount reported due on their return has yet to be paid, but no adjustments were made by the department. The resolution to this is, again, to make payment or to provide proof of payment. Okay. This notice type is going to be a variance notice. This notifies you of either an increase or decrease in the reported tax amount due. The amounts due will need to be paid using the gateway or telefile to utilize, or you can utilize the voucher at the bottom of every notice. And there's going to be a voucher at the bottom of every notice and every assessment if you don't have an electronic payment alternative. If an overpayment is determined due to an adjustment, due to a tax amount due, then it could be eligible for a refund, and this amount would also be featured on the variance notice. So this is an image of the variance notice, and you can see that it indicates any adjustments to the line items listed here, and it also has an as reported column and an as calculated column, so you can see exactly where the changes were made. The response required for a variance notice with an amount due is also known as a non-remittance variance notice. It is simply to remit payment or submit proof of payment. And then upon reviewing each of the notice types and how they're different, one thing that remains consistent among all of them is how to respond. You can pay an amount due or respond with the documentation, except for a delinquency notice, which in most cases requires a return to be filed. So that sums up the billing notices that go out specific to sales and use tax or other business taxes. But there's another set of notices that can be for sales and use tax, but not sent necessarily to just business tax owners. They can also be sent to non-business owners. And this billing program is for an audit of the casual sales of motor vehicles. So these sales are defined as the transfer of a motor vehicle title between two individuals who are not affiliated with a dealership. The transfer of a watercraft or an outboard motor is generally taxed in the same way as a motor vehicle, so you may also receive similar notices for these transactions. The first step is that a questionnaire is sent to the seller, and it's the seller that's listed on the title, and they're just checking to verify the purchase price of the vehicle. If no response is received by the seller, a secondary questionnaire in the same manner is going to be sent to the buyer for the same purpose. In either scenario, the notices can easily be responded to using our electronic forms online, which this platform was specifically created for this billing program response. This is going to allow you to submit the form for review without creating a user ID or password. And it's a very convenient option for our taxpayers who don't regularly have a need to submit correspondence to the department. The only information that you're going to need for filling out the online form is going to be found on the letter that you're mailed, and then any documents that you have regarding the sale transaction of that vehicle, whether it's a bill of sale or an invoice, something like that. Upon receipt of your notice, if a tax amount due is determined, this is going to generate a motor vehicle tax amount due notice. So please understand that the department is in no way telling the buyer or the seller what the vehicle should have been sold for, how much it should have been sold for. That's not the intention of the department. The intention is to review the title transactions to make sure that the correct amount of tax was collected at the time of transaction for the amount of the actual transaction, how much the vehicle was actually exchanged for. The amount listed on the questionnaire is an estimate, and it's based on the fair market value of that vehicle type. So not necessarily the value, the actual value of the vehicle in the transaction, but something like it. This is why we would need your response to get a more accurate number. If no response is received, then amount due is going to be generated based on this estimated amount. So there are other motor vehicle billing programs that you could confuse this with, so be careful. The motor vehicle casual sale program is different than an exemption review. Ohio law does allow certain vehicle transactions to be made without paying sales tax, and for more information on these special exemptions, you can find those at tax.ohio.gov. Under the Business Resources for Businesses link, there is a tile listed vehicle taxes, and you can find that information there. Now, the motor vehicle bills and assessments are unlike the other billing notices in that electronic payment options aren't available. These amounts due are paid using the voucher that's found at the bottom of your notice or assessment. This voucher is provided on both and is the only way that you can send in that payment. For motor vehicle billing and assessments, they are like the other notices that go out in that they will progress through the same billing timeline. So you'll get the notice, then you will get an assessment if it's not responded to. And if the assessment is not responded to, it can also be certified at the Attorney General's. So we just really want to make sure that we get the responses from you, and please utilize that online service so that we can get those processed as efficiently as possible. Now, after we've discussed the motor vehicle assessments, and I think this is a great time for me to introduce Katie. She is going to take over and describe the Ohio Department's assessment process through the end. So thank you guys for your attention, and I turn to Katie.
Thanks, Lindsay. You may not be able to see me, but I will introduce myself anyway. Let me try to turn off my webcam. I'm not sure if that's working, but in any case, hello attendees. My name is Catherine Zuka, and I am Division Counsel for the Bankruptcy section of the Ohio Department of Taxation. In my role, I address legal issues related to bankruptcy matters where the Ohio Department of Taxation is a creditor. As part of my role, I also review offers in compromise on tax matters. In my past, I've also served as a hearing officer, and I've been with the department a total of 5 years. Now that Lindsay has given an overview on billings and other notices from the department, I'm going to discuss what happens when a tax balance becomes an assessment. I would also like to discuss the various collection practices that occur if a tax is not paid timely. During this portion of the presentation, we will discuss assessments, as well as some specialized assessment issues, such as responsible party, petitions for reassessment, and the habitual offender program. Finally, we will discuss collection issues with the Ohio Attorney General's office, as well as offers in compromise. As Lindsay covered in her presentation, typically a taxpayer will receive a bill for a tax that is owed. If the bill remains unpaid after approximately 60 days, the assessment will be issued. A tax assessment is a formal notice of tax deficiency sent pursuant to the Ohio Revised Code. The assessment contains the account number, the type of tax, the tax period, as well as amounts for the tax, interest, and penalty. And the assessment notice will usually contain instructions if you have questions or need additional follow-up. Assessments are mailed now through regular mail, and this is a recent change. It used to be that here I am. Thank you. It used to be that assessments were mailed through certified mail from the department. However, recent law change made the department's assessment notices be just sent via regular mail. It's important to note that the assessments will also be available on Ohio Business Gateway for business taxes and for income and personal taxes on Ohio Tax e-Services. A taxpayer can respond to an assessment in several ways. If the assessment is for a period where no return is filed, the taxpayer can still go onto Ohio Business Gateway for business tax or Ohio Tax e-Services for income tax and file the missing return. Also, if you are asked for additional information with the billing, you can still respond to the assessment with the required documentation. Lastly, you can file a petition for reassessment if you disagree with the amount of the assessment, and we're going to talk about that a little later in the presentation. It's important to note that the Ohio Department of Taxation does not have the authority to enter into payment plans. If the taxpayer cannot make full payment at the time of assessment, they can make partial payment, which will be applied toward the tax. However, again, we cannot negotiate any payment plan at that point. If there's been a change to the tax amount due, or a return is filed later, or documentation is received, the tax department can issue a corrected assessment. The corrected assessment will contain the same information as the notice of assessment and will replace the previously issued assessment. The corrected assessment will also nullify both the assessment and any petitions for reassessment that were filed beforehand. So if there's a disagreement with a corrected assessment, a petition must be filed. We're going to move now to a special assessment issue. By statute in Ohio, there are certain taxes that have the ability to be assessed against an individual, beyond the corporation itself. And those taxes that are primarily sales and withholding tax. Those are our biggest taxes where the state will look to collect from responsible parties if the corporation does not pay the amount owed. However, other taxes that have responsible party assessment ability include seller's use tax, direct pay use tax, motor fuel tax, tobacco tax, petroleum activity tax, and IFTA. But again, the main ones are sales and withholding tax. And the main reason that these statutes exist is because when tax is collected by a corporation on behalf of the state for remittance, they're basically holding on to the state's money and just passing it through to the state. And so if those are not paid, the statutes give broad power to assess individuals who are responsible for remitting the tax. To move on to the details about who can be a responsible party, it's important to note that each of the taxes listed on the previous slide have their own statute for who can be held responsible. I've included in this slide the criteria for sales tax, the most common one that we reference, and it's the statutes are all very similar. But again, to determine liability, please reference the code section under the tax that you're concerned with. For sales tax, who can be responsible? An employee who has control or supervision or is charged with the responsibility of filing returns and making payments can be held responsible individually. Also, for any of the corporation's officers, members, managers, or trustees who are responsible for the execution of the business's fiscal responsibilities. So for responsible party, there can be more than one responsible party for a corporation. And if the department has unpaid taxes of the kinds listed previously, the department will use the information in its possession to assess a responsible party or parties. The liability for responsible party is joint and several, meaning that any one responsible party is liable for the entire debt. However, the department will not collect more than the original debt. If there are several responsible parties making payments on the debt, we won't collect more than is owed. However, each individual who is responsible is on the hook for the entire amount of the assessment. Now moving to a program that we really want taxpayers to be aware of is the habitual offender program. Like we talked about, taxes like sales and withholding tax, we call them trust taxes within the department and beyond, because they are really, the corporation is really holding that money for the state. And they're taxes that we take very seriously, and we want vendors and taxpayers to be in compliance with. So the habitual offender program is a compliance tool to help taxpayers make sure they remit the amounts that they're supposed to for sales and withholding. So if a business has 3 or more months in a 12-month period, or 2 consecutive months in a 12-month period where they do not remit or file sales or withholding returns or remit the tax owed, they can be placed on the habitual offender program. Now, before they get to this point, they would likely have received a lot of the notices that Lindsay described. So if there was a period where a tax return was not filed, we send a delinquency notice. Then if it remains unfiled, we send an assessment. If the return is filed but not paid, we will send a bill and an assessment. So by the time a taxpayer reaches the point where they might be eligible for this program, they've received lots of notices and hopefully have had plenty of time to respond, to remit the tax that's owed, to work out any issues that they're having. That being said, once a taxpayer is identified for this program, they will receive a notice that they're being placed on the program. The notice will be sent certified mail, and the alert notice will contain details and instructions on what is expected. Often it will give a list of outstanding returns or payments. It will give detailed instructions on how to pay, how to file. It's at this point where I would recommend, if a taxpayer receives a HOP notice, that they get in contact with the department right away, both to just let them know that they're working on compliance, to ask any questions, address any issues they might be having with filing and paying. But I think that communication is pretty important. As I said, the HOP alert notice will contain details and instructions on what's expected. And assuming they are complied with, they will return to business as usual. If the alert notice instructions are not followed, the Department of Taxation may follow up with an intent to suspend the vendor's license notice. The intent to suspend gives 10 days to file and pay the outstanding sales and withholding tax. And after this window of time, if there is still not compliance, the tax department will suspend the vendor's license, which often results in a tax department employee coming to the business and posting a notice that the vendor's license is suspended. To move toward tax appeals that we discussed, after an assessment or after a corrected assessment, or if a refund claim is denied in full or in part, the taxpayer has the right to file a petition for reassessment. And the disagreement on the assessment can be varied. The taxpayer can object to the tax interest or penalty calculations for the period that the tax covers, for the taxability in general of certain items and any exemptions that may apply. In the situation of an audit, they might object to the audit methodology. And for responsible parties, their status as responsible party. And let me make clear here that if a responsible party is assessed, they are able to challenge their status as a responsible party through a petition for reassessment. However, they are not able to, at that point, challenge the underlying basis of the original assessment, if assuming the original assessment's appeal period has also run. So if a corp receives an assessment that goes unpaid and becomes certified to the Attorney General's office, and then a responsible party is assessed and a petition for reassessment is filed, the taxpayer may only argue about their status as a responsible party and not the underlying tax itself. To go on, a petition for reassessment can also make an objection to the sentencing, apportionment, or many other factors. The petition must be timely filed, and a timely filed petition is within 60 days of the assessment. The petition must be received in writing, and we'll go through that in a second. You don't need to be an attorney to file a petition for reassessment, but you should submit supporting documentation along with your petition. As I said, you have 60 days with which to file a petition for reassessment if you disagree with the assessment or corrected assessment. The petition must be in writing. The department has a petition for reassessment form on our website. You can use that form. However, you don't have to use that form. You can also just simply have a written letter in which you say you want to file a petition for reassessment and you include details about the assessment itself so we can identify it. So the assessment number, the taxpayer name, the account number, the period, those are all really important things to include so that we can match it up with the assessment itself. But otherwise, you know, that form on the website is very helpful. The petition for reassessment must be signed by the taxpayer or their representative. As I said, you don't need to be an attorney or a tax preparer to submit a petition for reassessment. However, if you want to be represented by one, the department has a form. It's called the TBOR1. This form is a form in which you will enable the department to talk with another person about your tax. So for instance, if you wanted to be represented by a tax preparer, you and the tax preparer would fill out the form, submit it to the department, and then the department knows they can communicate with that tax representative on your behalf. Although you will still continue to receive, notices and other items. The petition for reassessment should indicate all your objections with the tax assessment. And at this point, it's a good idea to submit documentation if you have it. However, you will be given opportunity to submit anything further if you request a hearing. In order to timely file a petition for reassessment, like I said, that you have to send it in within 60 days after the assessment notice. And so that time period of the day you receive the notice until 60 days after. You can file the petition for reassessment electronically through Ohio Business Gateway or by mail or by hand delivery in our Columbus office. If you decide to submit all the documentation that you want to submit with your petition, you can do that and simply request that the department just consider what's been submitted, and you can also select to receive a corrected assessment based on the information you submit. However, another option is to request a hearing, and the hearings happen 3 different ways: one by phone, secondly in person in our Columbus office, and we also have a virtual option if the taxpayer requests it. You will receive notice from the department that your timely filed petition for reassessment was received. If a hearing is requested, it is the taxpayer's opportunity to discuss the merits of their appeal. Hearings are informal. There are no evidentiary requirements. There's no briefing schedule. It is merely a discussion between the taxpayer, their representative, if they have one, and the hearing officer from the department. And let me also back up and say that the hearing is scheduled at a mutually agreeable time between the taxpayer and the department. During the hearing, the hearing officer will listen to the taxpayer's contentions, take notes, ask questions, receive documentation from the taxpayer, and also, potentially identify any documentation that's missing, and provide the taxpayer with additional time to submit that. So again, this is informal, it's a back and forth. We want to receive all the information that the taxpayer has to submit. It's really important that the taxpayer's contentions are backed up by documentation. So for instance, if a taxpayer is claiming that there's a valid exemption that applies, the mere assertion that there's an exemption is largely not enough. The taxpayer should be prepared to defend their assertion with some sort of documentation. And that's very broad. The taxpayer can submit spreadsheets, ledgers, invoices, journals, logs, account statements, affidavits, even pictures to support their claim. After the hearing and after the taxpayers had the opportunity to present all the information and arguments that they want to concerning an assessment, the tax commissioner will issue a final determination. And this also applies to an application for refund that has been petitioned. The final determination will address all the issues on appeal and will address the legal basis for the final determination. So for instance, the final determination may uphold the assessment as it was issued, or the final determination may make an adjustment to the tax in part, or may make adjustments to the tax interest or penalty amount, and that all may be recalculated, or the final determination may cancel the assessment totally. It really depends. It's on a case-by-case basis with what information has been submitted and what the merits of the petition for reassessment are. Now, a final determination of the tax commissioner can be appealed to the Board of Tax Appeals, and there are other appeal rights contained therein. We won't be discussing those as a part of this presentation, but I want taxpayers to know that there are additional appeal rights beyond the final determination. So, assuming a tax assessment remains unpaid after 60 days after an assessment, and if there's no petition for reassessment filed, or a final determination has been issued and there's still no payment after 60 days. At that point, the tax assessment debt will be certified to the Ohio Attorney General's office for collection. The Attorney General's office is the collector for the Ohio Department of Taxation, as well as other state agencies like the Bureau of Workers' Compensation, Ohio Department of Job and Family Services, some of our state universities, state boards and commissions, public hospitals, and other government entities. So the Attorney General's office is really has a collection arm to it in which they collect public debt. Once an assessment or a series of assessments is certified to the Attorney General's office, there will be additional costs added on to the original amounts. So your original assessment notice, which has tax, interest, and penalty, you will receive another notice from the Attorney General's office, and the amounts will increase. There will be additional interest added on. There will be additional collection costs. So it does behoove the taxpayer to make payment before certification to the Attorney General's office happens, because the amount will only go up. Now, it's important to note that at several stages in the billing and assessment process, there are opportunities to file missing returns or close an account. And that remains. If the amounts are certified for collection and you still need to file returns or you need to close an account, you can still do that on Ohio Business Gateway, or you can also submit a business account update form on the gateway. However, it will require a little additional work because you'll need to circle back with the AG's office, and they will still have their own costs that apply. So it's a little bit more coordination when it gets to that level, but those options to clean up your account still remain. The Ohio Attorney General's office can use collection firms and attorneys called special counsel to collect debt. They can use all collection methods available under the law. They can take involuntary collection measures like place liens on property and garnish wages. Once an account or series of accounts for tax are with the Attorney General's office, the AG's office will consider a payment plan if the taxpayer can make regular payments toward the debt. So that's something to consider. They won't necessarily agree to every payment plan proposed, but they will work with you, and special counsel will work with the taxpayer on trying to get the debts paid. Now to move on to another special issue involving collection, and that's if the taxpayer files bankruptcy, whether the taxpayer is an individual or a business. So in the case of a Chapter 11 or Chapter 13 filing, those are the types of bankruptcy where debt is usually paid over time, and it's for taxpayers, corporations who have regular income to pay their debts over time. So when the Department of Taxation receives a notice that an individual has filed Chapter 13, or a corporation has filed Chapter 11, or an individual has filed Chapter 11, and they owe taxes, whether individual taxes or business taxes, the department will file a proof of claim in the case and attempt to attain to receive payment through the Chapter 11 plan or the Chapter 13 plan. It's at this point where the department will do a full evaluation of a taxpayer's account, and often it's here where we notice that returns are missing, and so we will work with the taxpayer or their attorney, because they will be represented by an attorney in a bankruptcy situation, to identify any outstanding returns that need to be filed, because we want to have an accurate claim, and that behooves the tax department and the taxpayer themselves. In most Chapter 7 bankruptcy cases, no assets are distributed, so there's not much the department does in those, but in some cases where they do distribute assets, also we will file a proof of claim and attempt to get partial payment through the bankruptcy. Now, after a bankruptcy is discharged, the taxpayer may be wondering where they sit vis-a-vis any taxes owed. It's important to note that trust taxes like the ones we discussed, including sales and withholding, in the bankruptcy code are not able to be discharged. And there's a reason for that. Like we discussed, the taxpayer merely holds on to funds for the state. Those really don't belong to the taxpayer themselves, they belong to the state. And so the federal bankruptcy code does exempt that from discharge. So sales and withholding taxes that go into a Chapter 13 or Chapter 7 will still remain owed after that, if not paid during the pendency of the bankruptcy. Also, for income and gross receipts tax, there's a complicated analysis. It depends on when the tax was assessed and for what periods the taxes are for. Some items are able to be discharged and some are not. It's very fact specific. So if a taxpayer has undergone a bankruptcy, they need to talk to their attorney about what items may or may not be discharged. Also, after a bankruptcy, they can contact the Ohio Attorney General's office, who will have all of their accounts, and also they will do a discharge analysis on those accounts. Another option and program that I want to talk about is the Offer in Compromise program. And as the name indicates, it is the ability of a taxpayer who has, it could be amounts small or large, that is certified to the Attorney General's office that they want to resolve. And perhaps, perhaps they have a lien on their property, perhaps their wages are currently being garnished, and they, have a valid reason for wanting to compromise the debt. And I'll go through, there are 3 reasons for filing an offer in compromise, which I'll go through in a minute. But to be eligible for even filing an offer in compromise application, you must have debt that is at least 1 year old, that you must file all tax returns that are outstanding, and that you complete an application that the Ohio Attorney General's office has available. So on the AG's Collections Enforcement Section website, they have the applications. You can submit it electronically, you can download it and fill it out and file it in paper. You can also call the AG's office and they can send you a paper copy if needed. The application is lengthy. It does require significant amount of financial documents, and there's a reason. If the AG's office and tax are deciding to accept a lesser amount than is owed, there needs to be full disclosure and a full review of the taxpayer's accounts. Now to move to the 3 bases for an offer in compromise. The first is doubt as to liability. So in this situation, the taxpayer contends that they do not owe the tax debt for any number of reasons. And the reasons are including the ones that I mentioned in the petition for reassessment. There's something wrong, the item wasn't taxable, the period is wrong, the amount is wrong, any number of things. However, by the time the petition period has ended and we're certified at the Attorney General's office, the bar is a little bit higher because you've had the chance to file a valid petition for reassessment. So for taxpayers claiming doubt as to liability, they really have to have good documentation and a good legal argument to prove that they do not owe the debt. And we do receive some of these from time to time. And again, the same documentation that we talked about is really required to support any assertion that there's a doubt as to liability. The second reason an offer in compromise can be filed is innocent spouse status. Now, this is particular to income tax. The IRS has a program for an individual who meets the innocent spouse criteria to receive federal innocent spouse status and they do it on a year-by-year basis. So just because you are an innocent spouse for 1 year and for a jointly filed tax return doesn't necessarily mean for every year. So if an individual gains that status from the IRS for their federal income tax, they can also submit an offer in compromise to Ohio, who often will recognize that federal status. So unfortunately, it's not an automatic. We don't get at the department. We don't get notice that a taxpayer has attained this innocent spouse status. They do have to work through the offer and compromise program so that we can verify that information. The third and final reason for an offer in compromise is economic hardship. There are many reasons why an individual can be in economic hardship, health issues, advanced age, retirement, fixed income. And so within the application for the offer in compromise, there is the opportunity to make an offer to settle but that has to be also, well documented by providing financial documents. And those include statements of account, current bills, all assets and property. So the AG's office will collect all that financial data. And again, it includes everything from a utility bill to a statement of how much your property is worth if you own it, what you receive in wages every month, any and all individual and business bank accounts statements, and also peer-to-peer accounts, stocks, basically all the assets of the individual must be considered when we're looking to, grant an offer in compromise due to economic hardship. Once an offer in compromise application is received, there's often some back and forth between a taxpayer and the AG's office because sometimes the application is not completed in full. Sometimes there's missing documentation, and the AG's office will respond and say, hey, we're missing this piece of documentation, we're missing that. And sometimes there's some back and forth, which can take a little time. But for a fully completed application, the AG's office will investigate all the items in the application. We'll make a recommendation to the tax department. My group at the tax department will look at the application and the circumstances, and also make a determination on whether to accept the offer in compromise or not. Sometimes we will make a counter offer. If we don't think the offer meets our expectations, we can make a counter offer. However, when a counter offer is issued, the taxpayer cannot make another offer. It's kind of a take it or leave it counter offer. Or the tax department can decide to grant the offer and to accept it rather, or the offer can be flat out denied. The decision to reject, to counter offer, or to grant the offer in compromise is not a decision that's appealable in any court. It's an administrative process. However, if the offer in compromise is denied, the taxpayer can still attempt another offer in compromise in the future. If the offer in compromise is accepted, the Attorney General's office will circulate an agreement to the taxpayer, with details about how the taxpayer will pay the debt. And in most cases, the taxpayer will sign. They will make payments pursuant to the agreement, and then following successful completion, those taxes will be dealt with, and any liens or garnishments related to them will all be resolved. If payments are not made in accordance with the agreement, or if there's any fraud or misrepresentation, the agreement will be nullified. This will conclude our presentation for today on notices from the department, and we've taken you from billing all the way to collection, and we've talked about some special issues that can happen in between. Thank you so much for spending time with us and for learning more about notices. Our contact information is included in the slide. Thank you so much.
Thank you, Katie. Thank you, Lindsay. Great information. I know the audience very much appreciated it. We got quite a few questions in, so thank you very much for being here with us. I just want to make some closing comments before we end today's webinar. In department news, we're excited to announce that we'll be onboarding a handful of business taxes to our OH Tax e-services in December of this year. That includes our sales tax and employer withholding taxes, which we've talked about today. We're going to post some information on the website. I'm going to drop that website in the question pane for everybody. That website is tax.ohio.gov/info/OH-tax. And we're going to put some information up there as we get closer to go live. So please keep an eye out on that. I know a lot of our presenters today talked about tax alerts. We announce a lot of our outreach webinars through tax alerts. So if you would like to get news of any of our upcoming webinars, please sign up for our tax education tax alerts, as well as whatever other tax alerts would be pertinent to you and your business. We did get some questions about whether or not we would be posting the recording at some point. We will. It will be before March 31st. So no later than May 31st, sorry. May 31st of this year, we will have all of the recordings available on our website. So at this point, that concludes our webinar. Thank you so much for being with us today. I'd like to thank all of the presenters and the great information that they shared, and I hope you have a great rest of your day.